screen. Fantastic. Great. So thank you all for attending this webinar and your interest in this research project. So what I'm presenting today is ongoing research on China's construction of financial infrastructures along the Belt and Road Initiative. And this is part of a larger research project, which is currently based at the Scripps Cluster of Excellence in Berlin, which looks at whether and how China is contesting the neoliberal global financial order. And it also encompasses other aspects, such as commodity finance, or the role of Hong Kong as a gateway to China, the role of Wall Street institutions within China. But specifically in this talk, I'm going to focus on the BRI. And maybe as a first, why do I actually look at capital markets in China? So I think it's important to note that capital markets in China have actually become quite important. So 30 years ago, capital markets did not exist. But if you look at indicators, be it the skyline of Shanghai, be it the role of capital markets for the total financing of Chinese companies, be it various indicators that measure financialization or the growth of capital markets, you can really see that there was a shift after the global financial crisis in China towards capital markets. And with some of these measures, they're even on par with the US, a highly financialized economy. So by now, Chinese capital markets are the second largest in the world, be it for bond, futures, equities, and they're internationalizing and thereby interacting with the global economic order. So with this research, in this presentation, I'm really looking at the Belt and Road Initiative and how capital markets play into that. So maybe as a primer, the IR and IP discussions, which this project tries to contribute to, very often the Belt and Road Initiative is seen as a tool of economic statecraft by China. And very often the mechanism through which China exercises this statecraft, i.e. achieves foreign economic policy, is very often the construction of physical infrastructures and the connectivity they create. And the reference point hereby are very often physical infrastructures. So ports, roads, railways. You can see this really fantastic database by Merix, for instance, which details all the different pipelines and ports and harbors and airports and everything, and the different channels through which this influence then can be exercised. However, finance only really is discussed in this respect with regard to lending for these physical infrastructures. So there's a lot of discussion around the AIIB or policy bank lending by China, but it's really very often with this lending aspect. And as Karen Lai and colleagues have pointed out recently, there's very few or hardly any analysis of BRI's financial dimension, so the capital market dimension, for instance. And this is the gap that I'm trying to contribute to with this research, to really look at the Belt and Road Initiative and the politics of financial infrastructures. And I'll talk about this in a second, what I mean by that. So, and the argument that I'm trying to make is that we should really take seriously financial infrastructures as a source of Chinese economic statecraft. The research scope hereby is on the Belt and Road activities of Chinese exchanges. I'll talk about this in a second as well. And the data that I've used for this BRI part of the project are mainly financial news, policy documents, and 44 interviews that are conducted in China, Hong Kong, Karachi, and hopefully a few more in the other cases that I'm studying. So why focus on financial infrastructures or exchanges? So financial statecraft, as it's often defined in literature, is the use of financial or monetary capabilities to achieve foreign policy. People have talked about swap lines, about monetary policy as tools of that, capital controls. I'm focusing hereby on the financial infrastructures, which also in this literature hasn't really been looked at in the terms of statecraft. And with infrastructures, what they do is infrastructures create connectivity between entities, right? They enable socioeconomic transactions between entities, but thereby they also sediment power relations. So, and this is also true for financial infrastructures, which are often defined as the socio-technical arrangements that enable the functioning of financial markets. There's something that recently has gained traction in IPE with publications in RIPE and NPE, etc., which came basically from the social studies of finance or science and technology studies. Now, when looking at capital markets, exchanges play an important role. This is some research I did over the last couple of years, something that was published last year in NPE, where I really look at the role of exchanges in the provision of financial infrastructures whereby they shape markets. And with financial infrastructures with regard to capital markets, what I mean is things such as market data, the access to market data, how we measure things, how we invest in things, such as through indices, for instance, or other financial products, be it futures or bonds or equities. The listing of companies is something that's facilitated also by exchanges. The trading rules themselves are made by exchanges. Who can access a market or who's encouraged to access a market? A very good example here would, for instance, be high-frequency trading. Would not be possible without exchanges actually providing the infrastructure to enable that kind of trading activity. So, and similar aspects around clearing, etc. And to break it down from this more technical aspects of the financial value chain, what matters for financial infrastructures is, or what they do is, they shape what is invested in, so invested opportunities, who gets to invest, investor structure, and how investing is conducted. So the rules according to which trading takes place, or these investments take place. And exchanges thereby can facilitate economic statecraft through these financial infrastructures. And this is not only a Chinese phenomenon. I mean, this is, as I will outline in a second, more so the case in China. However, even in the US, which is probably one of the most liberal markets in the world, liberal capital markets in the world, you do see the use of exchanges to facilitate economic statecraft. A recent example, for instance, is the US government's ban to invest into Chinese companies that ostensibly have links to the Chinese military, which had to delist from US exchanges, which had to be included from global indices, excluded from global indices. So this is kind of why I think financial infrastructures or exchanges matter in this regard, also with respect to financial statecraft and how they differ from physical infrastructures. So, and this all takes place within this China's interaction with Belt and Road countries. This takes place within the global financial order, which is kind of the larger picture that, or the big picture that the overall research project tries to incorporate. And what we have to keep in mind here is that this is a global financial order that really functions according to neoliberal principles and entrenches US financial hegemony. And to allow, in the case of capital markets, this is done by credit rating agencies, by Wall Street investment banks, but also by exchanges, which, and in kind of global finance or global capital markets, global exchange groups are mostly US based. So we talk about a handful of exchanges, which is ICE, CME, CBOE, LSE, NASDAQ, and Deutsche Börse Group, which really account for a large part of industry revenues in exchanges, derivative trading, stock market capitalization, or the value of stock market trading. They have global networks, which is the map on the left. You can see the concentration of the industry of the last 20 years on the right side, and you can really see how they compare with kind of other entities such as the BRICS, Japan, other regional players such as Singapore maybe, and all other exchanges. So they really dominate how global markets work. And NASDAQ, for instance, is a really good example because they not only have the NASDAQ market. NASDAQ is the dark blue one here on the right. Not sure if you can see my my mouse. So they have the NASDAQ market, but they also operate 28 other markets, futures and stock and options markets in the US and in Europe. And their market technology is actually used to power more than 130 market infrastructures around the world, such as exchanges, clearinghouses, etc. So how they organize markets really shapes global markets. And I mean, it's a similar story for the LSE, which I think their platform is used by 40 other exchanges. With Deutsche Börse, it's 30. So you really have global markets are basically shaped by these exchanges. And that's why things such as high frequency trading also proliferate. And they all, what they do is, in terms of investment opportunities and structure, they integrate with mostly Anglo-American global institutional investors and so on. Now, these are kind of the global capital market that I talked about. Now, China also, as I mentioned, has the second largest capital market in the world by now. However, they function fundamentally differently from global markets. This is something that I've analyzed in my PhD research at length, and really capital markets in China form an alternative to global finance. It's really, whereas global capital markets are really about enabling the achievement of efficient outcomes by enabling the creation of profit for private financial investors. So kind of, you can call them neoliberal capital markets. In China, it's much more about the control of markets and direction of market outcomes towards national development policies. And this is basically through, you can see this in exchanges, which, I mean, the large global exchanges, they have shareholders, they're profit driven. In China, they're owned by the state, they're policy driven. Investment considerations are thereby about short-term profit consideration with global exchanges, and more about long-term strategic considerations in China. And this is kind of the same with the role of markets. It's about generating profit, achieving state policy. It's and yeah, the same with investment rules, structures, and opportunities, as I've just outlined. And what's important in the case of BRI and China is that with regard to investment rules, it's really about shaping how markets work through financial infrastructures, and that these market rules to some degree facilitate state objectives, integrating markets into Chinese financial circuits and facilitate Chinese investor ownership and create useful as against to profitable investment opportunities. So instead of facilitating high frequency trading, it's more about listing BRI related companies, bonds, stocks, or ETFs. And with regard to economic statecraft, we're taking the example of the US-China investment ban. This is about entrenching US financial hegemony. In China, this is about facilitating state policy, in this case, the BRI. So how does the Belt and Road Initiative now play in here? So in the Belt and Road Forum for International Cooperation in 2017, there was actually a really interesting passage in a joint communique that was signed by all these heads of state, which was that BRI was also, I mean, finance is one of the five connectivities of BRI, but more specifically, they also talked about financial infrastructures, about enhancing financial infrastructure connectivity, exploring new models and platforms of investment and financing, develop local currency bond and stock markets, and so on. So there's an idea that financial infrastructures matter for BRI. Excuse me. That was communicated as such by the Chinese authorities. And this has also been picked up by the Chinese exchanges. So there's really a statement of intent to actually contribute to that, right? There's these official BRI mission statements. All the exchanges have these vision and action plans. The Shanghai Stock Exchange has it. Shenzhen, the different commodity exchanges in Dalian, etc., also have them, which are about promoting, organizing cooperation for capital markets along the Belt and Road, expanding direct financing channels for BRI construction, mobilize funds and enterprise from home and abroad, through bilateral cooperations with major exchanges, strategic cooperation agreements, joint ventures, shareholdings, business cooperation, etc. And also the Chinese regulator, the CSRC, similarly mentioned with regard to futures markets that Chinese exchanges should push forward internationalization of Chinese futures markets, should actively get involved in financial infrastructure construction of these surrounding countries, and get involved in the capital market framework design of these countries. So you can see that financial infrastructures really have crystallized as something that matters for in BRI. This was followed by a series of different seminars, workshops, cooperation agreements, international conferences, or joint investor days, etc. Now, with regard to financial infrastructure in the BRI, it's important to note that there is no overarching master plan, right? I mean, similar to other aspects of China's economy, things are messy. It's not a uniform state that kind of directs how the economy works. You have different initiatives, different issue areas, different actors, which whose actions can be partially contradictory, fail to fulfill stated objectives, etc. However, kind of the argument that I'm trying to make is that you do see a patchwork of financial infrastructures emerging out of these statements of intent, and they're all informed by specific institutional logic. One example for this is, for instance, the nomenclatura system. So with Chinese exchanges, especially senior management, they're all party officials. And in order to, and their performance is determined by, and their career prospects as well, not by how much money they generate for the stock exchange, which is how it would work for a global exchange, right? It's about facilitating shareholder value, maximizing shareholder value, but rather the key performance indicators for them, it's really about contributing to state policy. So they have an incentive actually to contribute to that. Whether it works or not is a different question, but BRI is an important government policy. And as several interviewees in China told me, and here's a direct quote from one of the Chinese exchanges, is as a state-owned exchange, we must do something. We must contribute to BRI. So what you can see since 2015 is that Chinese exchanges have been quite active in facilitating the construction and development of financial infrastructures along the Belt and Road. This is a broad pattern of engagement for sure. So you have multiple areas. You have transfer of technology, you have financial indices, you have memorandums of understanding or cooperation agreements that are being signed, which can also be just ceremonial. You have the issuance of BRI bonds, you have education and training of local exchanges, investors, and regulators, and you also have investment, actual investment that's happening. And this is, like a lot of BRI, this is a process that's still in its formative stages. So it's difficult to say something definite about this topic, but there's actually 3 cases that are quite instructive of the potential of this development. And these are the partial acquisitions of stock exchanges in Pakistan, Astana, and Dhaka by Chinese exchanges between 2016 and 18. Now, I walked you briefly through these 3 different cases and highlight some of the issues which I think are important in this regard. So with regard to the Pakistan Stock Exchange, a Chinese consortium was allowed to acquire 40% of the exchange in 2016. Now, foreigners are actually only allowed to own 30% of the exchange. So they took on board 2 local partners. One is the China-Pakistan Investment Corporation, which is actually a Chinese company incorporated in Pakistan, and Habib Bank, which is one of the largest banks in Pakistan, which together acquired 40% of the exchange. And the deal that they made was actually quite nice. So they have a majority on the board, 4 out of 7 seats. They had the right to nominate a CEO and other people like the CFO or CEO. They pushed through their CEO candidate, which was the first non-Pakistani CEO of PSX. They posted deputy CEO at the exchange, and they also sent staff to PSX. So we talk about 4 to 7 people, which are active in helping to develop the market and so on, and foster business relationships. And this really had an impact on kind of the financial infrastructures between China, the financial infrastructure that links China with Pakistan, as well as the infrastructure of the exchange in Pakistan itself. So in terms of investment rules, what before was a trading system in Pakistan that was defined as leaking. So it was basically issues around jumping the queue in high frequency trading, but only because, not because of technology, but because the large brokers were corrupt and just sold data on the side. So this was something that was, for instance, fixed. Corporate governance changed. So before, the exchange was an old boys club of the large brokers, and their power was substantially diminished. Now the exchanges, the Chinese exchanges, have a lot more power. They actually implemented Shenzhen Stock Exchange's market surveillance and trading system at PSX, which it's currently being implemented, and thereby also incorporating kind of different aspects of how Chinese exchanges would organize their markets within Pakistan, which is a much more proactive role of the exchange as a frontline regulator, more capabilities to monitor what happens in markets, and thereby also to steer market behavior. So this is how investment rules have changed or are changing in this case. With regard to investor structure, you can see actually a few interesting developments. You can see the acquisition of Pakistani brokers by Chinese brokers. So CLSA is the Hong Kong subsidiary of CITIC, the largest investment bank of China, in China. And they've acquired a broker. You can see the listing or the licensing of Pakistani indices for Chinese asset managers, so in order to list ETFs on the Pakistani market in China and actually bring in Chinese investment. You can see them facilitating cross-border mergers and acquisitions. So there's an ongoing acquisition process between Shanghai Power and K Electric. And interestingly, and this is, I think, the most interesting case, is Habib Bank, who was a partner in the acquisition of PSX, actually now is the largest executor of BRI projects in Pakistan. So we're talking about projects worth $6 billion US. And they're the first Pakistani bank to have an office in Beijing. And they even, and this is a novelty, they even have they're allowed to interact with SOEs and the regulators. So they have an official role to play in the BRI. And you can really see how the investor structure has been more integrated through that. Now, with regard to investment opportunities, one thing that we can currently see is that China Three Gorges, which is a Chinese energy company, is now listing on PSX, which is, I mean, they should have already listed, but then COVID came, so this has been, I think it should happen in the next couple of months. And China Three Gorges, actually, they already have a few electricity plants, wind turbines and hydro electric plants in Pakistan. And now they already account for 7% of electricity production in Palestine. And by listing, they raise even more funds to facilitate even more of these projects. You can actually see the integration of financial and physical infrastructures here as well. So in late 2020, Pakistan's PM said in an interview with Al Jazeera that our economic future is now linked to China. And you can actually see that financial infrastructures do play a role here as well. Now, in the case of Astana, the setup is a bit different. You also have an acquisition with the Shanghai Stock Exchange agreeing to co-build the AAX as the largest investor with 25%, and the Silk Road Fund also about 5%. So 30% are owned by Chinese financial actors. And the deal is NASDAQ also is a minority shareholder. They provide the technology, so there won't be as much changes on a set of investment rules. At least that's the current state of my research, that there is not that much change in this area. However, SSE, so the Shanghai Stock Exchange, they would do strategic consulting, business planning, product development, and expand the market. And this is also highlighted by a quote by AIX's CEO, Tim Bennett, who said that Shanghai Stock Exchange are not only a shareholder, they are contributing staff and resources, but more importantly, they are providing a gateway for us to talk to Chinese funds, Chinese brokers. So you can really see that connection again that is created by the exchange as the infrastructure provider. Now, they have a seat on the board as well. They have staff at AIX. They post a deputy CEO of the exchange, and they propose the CEO again. In terms of investor structure, you can see that there's dozens of joint conferences and roadshows that are hosted both by AIX and the Shanghai Stock Exchange to attract Chinese investors to the market. And there's a real influx of Chinese financial actors. So CDB, for instance, opened the very first representative office in the AIFC, which is the Astana International Financial Center, where AIX is based. So that's kind of the idea of Kazakhstan president to create a regional financial center similar to Dubai, for instance. That's the model on which it was based upon. So then you also have things such as CICC becoming the first non-Kazakh member at the AIX. Actually, at the moment, there are a few other foreign members as well, but the Chinese are by far the largest group of foreign brokers active on AIX. There's also acquisitions, so CITIC, again, acquired the bank, Universal Bank in Astana. With regard to investment opportunities, you now have a dedicated Belt and Road market segment on AIX, where RMB-denominated products such as BRI bonds are being issued to facilitate BRI investment within Kazakhstan. And AIX is to be fueled by the privatization of Kazakhstan's large SOEs. And again, you have all these roadshows and joint conferences trying to gain Chinese investors to invest into this market and actually participate in the privatization program. So you can really see this interaction and integration of Chinese and Kazakh markets. And as a writer by Forbes noted, the scene is dominated by Chinese investors and Chinese financial entities in Astana. Now, with regard to Dhaka, which was the last case I'm talking about, this is the most recent acquisition, which was in May 2018, about a 20% stake. But here you actually can see another interesting dimension, which is the political conflict between China and India. So actually, it was an Indian offer to buy the same stake in the exchange. And the Chinese really massively outspent them. They spent almost twice as much to acquire the stake of the exchange. And you can see this is not, there's no business case for these acquisitions, as one of my interviews from the Global Exchange noted. There's no business case, this is strategic. So here, similar deal, there's seats on the board, or a seat on the board, technology transfer, investor access, joint product development, etc. With regard to investor rules, currently Dhaka Stock Exchange runs on a NASDAQ system. However, once the contract expires in 2 years, they're going to switch to the to the Shenzhen model, which also enables a much deeper access of market data in a way that would be unthinkable for global markets in terms of the surveillance mechanisms that Chinese exchanges have. In terms of investment opportunities, there's a joint index development to bring Chinese investment into Bangladesh. There's a new SME trading or investing platform to gain access from, or to bring Chinese investors actually into Bangladesh and thereby help to finance small and medium-sized enterprises there. And there's a real emphasis to attract Chinese investors, which is something that a lot of DSE officials have, and the Bangladeshi securities regulator have often mentioned. They're planning to create that Sino-Bangladesh financial corridor and deepen capital market cooperation. So this is the most recent of the three developments, but you can actually see that here again you have a gradual integration of these markets. Now, I took these three cases because they're the most advanced, but actually you can see other cases as well around the world. So in Abu Dhabi, the Shanghai Stock Exchange and Abu Dhabi Global Markets, which is the market development authority, they're actually trying to build a Belt and Road exchange at the moment there, which would be an exchange that also facilitates Belt and Road investment in the Middle East region. In Germany, you have Sinex, which is a joint venture between two Chinese exchanges and Deutsche Börse Group as a minority shareholder. The slogan, interestingly, is bridging markets. And now the first Chinese companies have listed in Frankfurt. So Haya has listed in Frankfurt the first RMB-denominated Belt and Road bonds were issued in Frankfurt on this new platform. So these are kind of establishments and acquisitions of exchanges where you can see a few planned ones as well. Second, you also have advanced inter-exchange cooperation and connectivity that is being created with Belt and Road countries. Now, a very interesting case, which goes a little bit beyond Belt and Road, but which I think is fascinating, is the Sino-Russian exchange cooperation, which really is about, I mean, their stated aim is to unify the liquidity pools of the RMB and the Russian ruble, partially also to evade the US dollar system. So you can see the dollar share of China-Russian trade settlements actually decreasing to below 50% last year for the first time, up from almost like 90% 5 years ago. At the same time, you can see a real increase of currency trading between the two countries, which is facilitated by exchanges. Now, these are these inter-exchange corporations. There are several of them. And then there's mechanisms that are created to attract Chinese investors to markets. Now, here VNex is a really interesting example, although it's not the only one, which is a platform that is created by the Shenzhen Stock Exchange and that tries to bridge kind of innovative enterprises, so mostly SMEs, startups, etc., with investors which are mostly from China. So I mean, there's a few international investors, but of the 23,000 investors included there, most are from China. And what they do is they provide a platform to kind of match, they even have these matchmaking seminars, they call them, to bring together Chinese investment and these enterprises. And since it was established, I think 2016, they've fundraised more than 530 billion RMB of investment for more than 1,600 enterprises. Now, taken together, what you see now is you see the patchwork of financial infrastructures that I've noted earlier that is gradually emerging over recent years. Part of this is also the Shanghai-London Stock Connect, or the listing of Shanghai Gold Exchange futures on the Dubai Gold and Commodities Exchange, which is also planned for the Budapest Exchange. You have these capital services platforms, cross-border capital service platforms with Laos, with Cambodia. You have aims to attract Chinese investors to Indonesia and to the Philippines, and so on. So you have all these different infrastructures that are emerging, and they're still in their infancy, but you can actually see that something is happening here. So the tentative conclusion that I currently have is that what you do see is probably that you see the emergence of a parallel system of capital markets with Chinese characteristics here. And I think there's two quotes which I find quite interesting in this regard. One is the emerging market strategist of a global exchange based in London, who during an interview noted that we are passing the moment where a lot of the infrastructure is owned by the Americans. And what we see right now is a shift in power with China in a standard-setting role in these countries. And secondly, Mark Beeson, who noted that there is a sense that the existing institutional order reflects and entrenches a form of American hegemony that works against Chinese interests, which is also something that applies to finance. It is also the reason why there's a push to internationalize the RMB and to move away from dollar dependency and so on. However, if the BRI becomes a reality, he says, it will quite literally cement China's place at the center of a regional network of production processes that will enhance China's overall economic and geopolitical importance. And the same, I argue, applies to financial infrastructures. So what you see is China actually becoming the center of a network of financial infrastructures along the Belt and Road Initiative. And they are used as a tool of economic statecraft to facilitate BRI to achieve this foreign economic policy. So while in its formative stages, I think this has potential implications for the liberal financial order, because China is now at the center of, is it a parallel system of capital markets with Chinese characteristics along the BRI? I'm still not quite sure, but this is what I'm trying to find out. So I'd be really happy for any comments and questions from your side. Thank you very much. And that's it.